September was the worst month that the S&P 500 has experienced since the Great Recession. What is happening with inflation? What is happening with interest rates? What is going on with our debt ceiling? I'm going to cover all of that today on our monthly economic update. Hello, everybody. I'm Dean Barber, founder and CEO of Barber Financial Group. Welcome to the monthly economic update. It is October the 6th as of this recording. So a lot of things going on out there in the political environment right now, the least of which is the debt ceiling. So that has not been addressed as of the date of this recording. Hopefully by the time we get to November, we've got good news and we've got an increased debt ceiling that doesn't come with too much pork. Now, why is the debt ceiling a big deal? The debt ceiling is a big deal because we have to have the money to fund the government. Why do I say I don't want it attached to a bunch of pork? Because that's tied directly to inflation, and inflation is tied directly to interest rates. So the market is telling us today that if Congress does nothing, no more additional stimulus, we should hit the Fed's target inflation ratio. They are afraid, the markets are afraid that if this massive $3.5 trillion stimulus comes in, it will cause inflation to run out of control. Inflation is something that most of us have not experienced during our lifetimes, but it is something that the market absolutely hates and is fearful of. We have a great video out on our website about retiring at market highs, and it really goes into what impacts of inflation can have on your portfolio in retirement. So I'd encourage you to watch that as well. So with all that in mind, that is why we're seeing the volatility that we're seeing today. So the first thing I want to do is I want to take a look at what's going on in the markets, but not just in the month of September, which, by the way, was the worst month that the market has had since March of last year, which was the beginning of the pandemic, down 4.66% on the S&P 500. But I also want to take a look at what's the markets done so far this year. So let's start with what have the markets done so far this year. If you take a look at this chart, you can see that virtually every index is in positive territory. Best index, the S&P 600 small cap, positive 21.26% year to date. The bottom of the pack is the Dow Jones Industrial Average, positive by 12.21 year to date, and the S&P 500 is right in the middle, positive by 15.84% year to date. So across the board, we have seen great returns in equities so far this year. And I think most of us would agree that if we finish the year at these levels, that constitutes a great year in the market. But we've seen the volatility creep back in here over the last month. So let's take a look here over the last month. And again, this will be 30 days back, not exactly a single month, but this is a 30 days back. So now we see all indices in negative territory. The best index is the S&P small cap 600, down by 1.05%. Worst is the NASDAQ, negative by 6.34%. And then the S&P 500, negative by 4.41% over the last 30 days. So while the last 30 days have been tough, we also know that September and October tend to be the most volatile months. The question that is on a lot of people's minds is this just some normal market volatility as we wind out this year like we typically see in the fourth quarter? Or is this the beginning of something far worse? The only way that we're going to know that for sure is time. I believe personally, this is going to be normal market volatility, normal correction type of activity. I don't see, with the economy running as strong as it is, with the new jobs that were created in September, 568,000 non-government jobs. So that's a private sector payroll. That was far better than expected. We've got the federal unemployment running out, and that should put people back to work. So time will tell. We got interest rates, we got inflation, we've got what's going on in politics right now, all going to continue to cause, I think, some pretty good volatility in the market. I also think that this is a time where you can step in and say, okay, if I started the year at a 60-40 portfolio and I'm now at a 70-30 portfolio because of what the markets have done, is this time to take some money off the table? Take the winnings, put them back into the more conservative part of your portfolio. It's got to fit into your overall plan. You should be talking to your advisors and making sure that what your portfolio is doing today fits into your overall plan. If risk has gotten too great because of what equities have done, it may be time to have a discussion to trim that equity position back. Stay tuned for the economic update for the month of October. That'll come up in early November. A lot's going to happen between now and then. If you have questions, if you need anything, make sure you reach out to your advisor here at Barber Financial Group. Thank you for joining me and have a wonderful day. Make sure you subscribe to our YouTube channel and give us a thumbs up. Also, I want to encourage you to check out our podcast, The Guided Retirement Show. There's so many amazing episodes out there right now, and I want you to share those with your friends.